Hello, how to depreciate a business asset. To depreciate a business asset, you will choose, we are not going to expense the cost of the asset, we are going to depreciate it. We are not going to take the special depreciation either. So to depreciate a business asset, you will choose the MACRS system, whether it is GDS or ADS. GDS is General Depreciation Service. ADS is Alternative Depreciation Service. So most of the time, GDS is the depreciation system that is applied to most assets. But ADS can be required in some instances, like if you are using a listed property, a property you use, an asset you use for personal use, and then you use in your business as well, but you use the percentage business use is 50% or less, ADS might be required for you to use. So once you choose the depreciation system that you want to use to depreciate your assets, you locate the asset class life, you will locate the asset recovery period, you locate the classification property, you'll choose the depreciation method, you'll find the right convention, and the month you place the asset in service will be important to know as well. That all those factors will allow you to locate the title of the right table to use, and you locate the right column in that rate table, and you will use the rate within that column to depreciate your assets. So all of those informations, you will find them in IRS publication 946, how to depreciate property. And I will suggest you open the instructions, IRS instructions for Form 4562 as well. So to go back to what we just talked about and see where you'll find them. So when you are trying to depreciate an asset, you'll first see if your asset is listed. Here you have class lives. Um, you have classification of properties. So in the classification of properties, they have a summary of some assets listed. You'll first see if your asset is clearly listed in more than, and in the instructions for 4562 you can find additional information. So let me see. So you'll find the classification of properties, the list as well, and you can go through it to see if you have your asset listed among them. When you locate your assets, you'll then go to the classification. When you found the classification of property, that's pretty much another summary here for class lives, because you may not necessarily find your classification of property in this list, but when you find it, whatever you found it, you'll use this short table here to locate the classification of property. So when you locate the classification of property, you'll be able to locate the recovery period. And the recovery period is just the how many years you will depreciate your assets. So you use the classification of property to locate the recovery period. So when your asset is listed under the classification of property assets here, you don't need the classification life uh, section because you already have the classification of property and your assets is listed there. So you'll go to the recovery period to find the recovery period for your assets that being depreciated. So when we go back to the publication 946 with those information, you will go to, and I believe this one will have the recovery period as well, but does not have the class lives the way we saw it in the instruction. So when you know the property class or the classification of property, you'll be able to locate the recovery period. So you will go to Appendix A. See here, and Appendix A, and the page will vary, but the Appendix A is at the bottom, toward the bottom of the publication, and the classification of property that we look up first is you can find it in the publication 946 page 28, also depend on the version you are using, and in the instructions you'll find it on page 9 and 8. So we are still looking at looking for the appendix A. So when you have those information, you'll come to appendix A. So you'll choose the MACRS system. You'll choose a depreciation method. You have the choice between 200%, 150%, and straight line. Under GDS and under ADS, you have options as well. So recovery period, that's what we just talked about and came from. So the recovery period, you know that you choose the convention, and the convention will depend on um, how. Okay, so usually for most assets, now residential rental property or non-residential real properties, but for other assets, you have mid-quarter and half year to choose from. When mid-quarter does not qualify, then you choose half year. So you choose mid-quarter when you look at assets you purchase and place in service in quarter four, assuming you are using calendar year, January to December calendar year, what you put in service in the last quarter, quarter four, and that does not include cost of residential rental property and non-residential real property. So the cost of other assets, excluding rental properties and non-residential real properties, if you put 40% or more assets in service in quarter four, you will use mid-quarter convention for all assets you place in service during that year. And by mid-quarter, you just assume every asset you place in service, you place it in service halfway through each quarter. For that reason, you need to know the month you purchase the assets, the month you place it in service, and aka the quarter that corresponds to that month as well. Because it might come into play and then you will total all your purchases asset wise to see if what you purchase in quarter four and place in service, if that's 40% of the whole year purchases. I usually avoid making asset purchases for our business in quarter four because I do not want to use mid quarter if I can help it. So half year. So half year, if you didn't place 40% or more asset in service in quarter four, you will use half year convention. And by half year, you just assume any asset you place in service during the year, you place it in service halfway through the year. So you will depreciate the first year depreciation will be divided in two. You depreciate half, you deduct or report half of that depreciation deduction the first year, and the other half will be depreciated, will be um, deducted the last year of the depreciation years. So every other years between the first year and the last year will take the full year depreciation. That's how half year depreciation works. So based on that 40% threshold, you will choose the convention to use, and the class is class classification of property, and yeah, and we already came back from there to find the recovery period. So you will know that. So knowing those factors, that will narrow down your choices toward the type of table you will use. So the month or quarter you place the asset in service might come into play for some of um, the choices that you are choosing, whether you are choosing 200% of depreciation method with GDS, and based on the recovery period, especially for mid quarters, that will come into play, and based on the quarter, you will choose the table. So when you have multiple assets placed in service throughout the year and that cross multiple quarters, you will use different type of table, different type of depreciation rate for each quarter. So, okay. Now, if you didn't find your assets in that classification of property list of assets, you have appendix B that you need to look in, you need to refer to. So appendix B and this appendix A, you locate it in on page 69 or so. So once you find the table, taro, the rate table, the taro of the rate table, you scroll down to locate the rates. So let's do that first before we go to appendix B. So for instance, we highlight A8. So we look for A8, and when you look for A8, each table is different. So A8, you have the number of years that you are going to depreciate the asset. The recovery period is on each column, and the number of years you are going to depreciate the assets is on each row. So if your recovery period is 5 and you choose, and based on your choices you land it on table A8, then the rates in the column 5 recovery period is what you will use to depreciate your asset. And you'll notice that you'll take 10% the first year, 10% the sixth year, and the remaining years between will be the full year depreciation, which is 20%, because we chose straight line here. So, and then they for A8 they have the number of the recovery period years is long. So now, if you didn't find your assets on among the example of asset listed under the short list of classification of property, you'll go to Appendix A, Appendix B. And Appendix B comes with some instructions that is good to read. So Appendix B has two tables. Table B1, which lists assets used in all type of business activities. And table B2 lists all type of business activities minus few, and mention some specific assets used in those with those business activities or in those business activities. So you will use both table B1 and table B2 to find your recovery period, because the end goal is to find the number of years you need to depreciate your assets. That is the recovery period. So the way table B1 and table B2 works is, first you look at table B1, looking for your assets. So if you find your asset in table B1, you'll go to table B2 to look for your business activity. So let's go a little bit up here and we can read it. So if you find Okay, so if you find your asset in table B1, you'll go to table B2 to look for your business assets. And then you read to see if they specifically mention your assets that you want to depreciate under your business activity. They have to name it. So if you, so they have multiple options here. So you will, let's read it. You will need to look at both table B1 and table B2 to find the correct recovery period. So generally, if the property is listed in table B1, you use the recovery period shown in that table. However, if the property is specifically listed in table B2 under the type of activity in which it is used, you use the recovery period listed under the activity in that table. So if you find your assets in table B1, you go to table B2 and you find your business activity, and the asset they list under table B2 under that business activity mention the name of your asset that you want to depreciate. You will use table B2 recovery period for that asset. That's pretty much what that first option is. Requirement. I don't know if I say requirement or case, but anyway. So table B1. Check table B1 for a description of the property. If it is described in table B1, also check table B2 to find the activity in which the property is being used. If the activity is described in table B2, read the text, if any, under the title to determine if the property is specifically included in the asset class. If it is, use the recovery period shown in the appropriate column of table B2 following the description activities. If the activity is not described in table B2, or if the activity is described but the property either is not specifically included in or is specifically excluded from that asset, then use the recovery period shown in the appropriate column following the description of the property in table B1. So when you find your assets in table B1, you go to table B2 to find your business activity and you locate your asset is mentioned in table B2, you use table B2 recovery period to depreciate that asset. So if you find your asset in table B1, you go to table B2, you find your business activity, but they didn't specifically name the asset you want to depreciate under your business activity. You go back to table B1 and you use the recovery period on table B in table B1 that corresponds to that asset there to depreciate your assets. So if you find your asset, I'm just talking about different cases here. If you find your asset, so we talked about two cases so far. The third one is if you find your asset in table B1, you go to table B2, you do not find your business activity, then you go back to table B1 to look for your asset there again, and you use the recovery period from table B1 to depreciate your asset. So that's three cases right there. So if the property is not listed in table B1, check table B2 to find the activity in which the property is being used and use the recovery period shown in that. Okay, so when you look for your asset in table B1 and you don't find it, that's the fourth case, and you go to table B2 to look for your business activity and you find your business activity, if the asset you are trying to depreciate is specifically named under your business activity, you use the recovery period that is under your that corresponds to your business activity to depreciate your assets. That's case 4. Case 5. If you go to table B1, you do not find your assets in the list of assets in table B1, you go to table B2. Under table B2, you find your business activity, but you do not find your asset specifically listed under table B2. You use the recovery period that corresponds to your business activity in table B2 to depreciate the assets. So that's case 5, if I'm tracking it well. So case 6, if the asset is not listed in table B1, you go to table B2, you do not find your business activity there. There is, under table B2, there is recovery. Okay, so let's see here. If the activity of the property is not included in either table, check the end of table B2 to find certain property for which recovery period is assigned. And usually is 7 years recovery period if you are using GDS, or 12 years if you are using ADS. So they have those. But remember, if you are in the rental properties, so residential rental properties, on top where page 8 where we find the classification of property, they mention residential rental property and non-residential properties there. So those are covered there. But for other assets that you might use in your business, you might need table B1 and table B2. So we are going to now, after we explain the theory behind how to depreciate a business asset, we are going to do the practical side of it. So we are going to use an example to depreciate an asset, and we are going to complete or fill out form 4562, depreciation and amortization. So when you purchase an asset for your business, it is crucial you have a good recording for those purchases, because generally you do not treat assets as expenses fully deductible in the year you purchase them, unless you are claiming section 179 and special depreciation for all those costs to be expensed the first year. Otherwise, you have to capitalize it and depreciate it year after year. So I'm going to pull an example of our, we probably need this one. Therefore, if you do not have an accounting software that is tracking your assets for you. You can design it using your own spreadsheet, or you can purchase one from liberdownload.com. The description to the website will be in the description. The link to the website will be in the description. But so in our example here, and we have different type of depreciation spreadsheets there to choose from. We are using one in this example, and we are going to depreciate iron. Let me make it a little bit bigger. So we purchase an iron, and you'll notice that the iron we entered in our depreciation spreadsheet, and we put down the business activity that is using it, the purchase date, the cost, the date it is placed in service, and 100% use in business. So throughout the year, when you are purchasing asset, it's good to go to your depreciation spreadsheet and cover, the those portion of the spreadsheet with those information, and later you can go back and add other things to it that will help you depreciate the asset later. So throughout the year you do that, and for this example we have one asset to depreciate. So iron is used to iron, like iron fabric. So knowing what the asset is used for, let's go to our publication 946, page 28, classification of property. We know we are going to use GDS because it's 100% used in the business. So let's quickly read through 3-year property. We are not going to find iron there. 5-year property, we are now finding hold on, I pass it. So 5-year property, I'm not finding there. 7-year property, iron is not listed either. So I know it's not going to be 10-year or 15 years. So first step, we perform that first step. The assets, our asset is not listed under the classification of property here. So we need to go to table B as appendix B. So it will be on page 99. So table B1 first. We need to look for iron in table B1. So there is office, furniture, fixture, and equipment. There is information system. And when you are reading this, it's good you read, those what they include. So data handling equipment is not going to be a airplane. Things is not going to be a buses, no. Lights, general purposes, trucks, no. Heavy general purpose truck, no. So land improvement is not going to be there. Industrial, sim, and electronic generation. Okay, so when we are looking through this, we are not going to find it either. So pretty much we just went through table B1 without finding our asset. So we need to go to table B2 to look for our business activity. So we are in retail business. In fact, we have multiple business activities covered in our business. So, but the general business activity is retail. So first, let's go look for retail. But while you are going there, you can read through the publication, the table B2, to see if you will find a business activity that describe how you are using the assets. And you'll notice that I highlight 23. Manufacture of apparel and other finished products include assets used in the production of clothing and fabricated textile products by the carding and sewing of woven fabrics, other textile products, and fur, but does not include assets used in the manufacture of apparel from rubber and leather. And it best describe the what we do with the iron, because we sell cloth napkins. We use the iron to iron the fabric and carry. So this sub activity under our retail business describe the use of the assets. So we highlighted, and while we are here, let's take a look at. So we didn't find iron in table B1. We find the business activity in table B2, but table B2 does not specifically name iron. But table B1 does not have the assets. Table B2 has the business activity but does not have the assets specifically named. Therefore, we are going to use the recovery period from table B2 that is related to that business activity. So we go a little bit up to find the taro here. So they have, maybe I should make a little bit smaller so that we can see the whole, if that's possible. Okay. So we have class life in years, and for the highlight portion it is 9. And we have GDS system recovery period is 5, and then if that's ADS, that is 9. So we take note of that recovery period is 5. But now, since our business activity is in retail, because as we just don't manufacture, we sell to the end users as well. Let's continue to looking for the main business activities that our business is in. So, distributive trade and services. 57.0. The first one that we saw that matched the sub activity of the business was 23.0. And if you are wondering what those are, is assets class. It's good to know the asset class. So 57.0, distributive trade and services, includes assets in use in wholesale and retail trade and personal and professional services. Includes section 1245, asset used in marketing petroleum and petroleum product. So if you are in a service business, you are in a retail business, you are in a wholesale business, this asset class 57.0 is going to pretty much be your business activity, because it just cover that huge um category business, uh all of those type of business activities right here. So asset class 57 work well for our business as well, and I could use this one or the other one, but because we just don't sell, we produce and sell, I like the other one more for the iron. But I have two to choose from, and frankly 57.0 will be, because when you produce and you sell to the end user, you are a retailer. That's the definition of it. You are a retailer. Therefore, 57.0 will be more appropriate, but I'm going to use the other one. So if you are going to use 57.0, you have the class lives in years is 9. The recovery period under GDS system is 5, and under ADS the recovery period is 9. So now we know, and let's go a little bit up here to find. So when they say class life, the thing is with table B2, it tells you the recovery period right there. But if you have to find the recovery period, the class lives will be helpful. So let's say we found the class life is 9 years. If you go to the instructions to the publication 45cc2 on page 8, class life in years, they say more than 4 but less than 10, you use the classification 5-year property. So the class life will allow you to find the classification of property, 5-year property. So when you take that 5-year property, you will locate the recovery period on page 9. So classification of property, 5-year property, the recovery period is 5 years. So from table B2, we already know the recovery period, but we may not know the classification of property. When we are completing Form 45cc2, they will ask you for classification of property. So knowing the class life of 9 years, you will be able to locate the classification of property on page 8 of the instruction 45cc2. That's 5-year property. Or you can back into it using the recovery period table. 5-year recovery period corresponds to 5-year classification of property, so that you know which row on line 19 you need to put your assets on. So those little information allows you to know exactly where your information, your depreciation deduction will go at the end. So now that we have those information, we need to put them on our spreadsheet so that we don't need to keep coming back here to find them. So we are using that class live 23.0. So class asset class 23.0 on your spreadsheet, you will put asset class 23.0 and class life. So class life will be 9 years, and we have other information that we'll put to the recovery period. So classification of property knowing 9 years of class life. We'll find that on page 8 of the uh, instruction for Form 4562 depreciation and amortization. So 9 years is 5-year property. We'll go to our spreadsheet and we'll put where is the classification of property is 5, recovery period. So recovery period will go back to our publication 946. Recovery period is 5 years because we are going to use GDS. So GDS is 5 years. So we will go to our spreadsheet and we have GDS bar 5. And now we have that information on our spreadsheet as well. So now that we pull information from table B2 to find how many years we need to depreciate the assets, we'll need to now go to Appendix A, looking for the table we need to use. So now we'll go back to publication 946. Okay, to Appendix A. And table B, Appendix B is on page 99 of publication 946 or so. Appendix A is on page CC 9. So page 69 of publication 946. So we chose GDS. We know our recovery period, but we need to choose the depreciation method because they have multiple options here. We need to narrow down the option to find our rates. So we are going to choose depreciation method. We have the choice between 200, 150%, and straight line. So pretty much when you choose 200%, you are going to take a lot of depreciation at the beginning of the year. When you choose 150, it's going to be a little bit less. When you choose straight line, it's going to be about the same throughout the year, except the first year and the last year when you took half, if you are using half year convention. So we are going to choose straight line. I like straight line, but again, you have to do what is good for your business. And so we are going to choose a GDS depreciation method. We are going to choose SL. And recovery period for GDS and SL, they just say GDS. So, but we know that's 5 years for us because if you choose a straight line under GDS, it covers a wide range of recovery period. That's why they didn't specify, will be my guess. And convention, frankly, they have for the option we are choosing, they have half year there. And they have another option if that was mid-quarter. So for our assets, and we can even go and put some information in it. So we have straight line that we put down. Let me go to the left to see if I need to cover some. Okay, so method depreciation method, that's what that means. So we chose SL, straight line. Convention is half year because that was the only asset and we place it in service in Q1 because we bought it in March and use it in March. So January, February, March, April, So, and we do have the Q breakdown as well. So Q is 3 months. So January, February, March. So the asset was placed in service in Q1. Therefore, um, half year is what we chose because that's what we are qualified for. And those can be, repeated on the right side of the spreadsheet as well. So we have SL here. Now we'll go back to our table. So half year class, they have any. So ours was 5 year property class. So yeah, we didn't have option to choose from. And month or quarter any, and the table tarot is A8. So now we locate the table tarot A8, we'll put it on our spreadsheet A8. So now that appendix A help us find the table we can use to depreciate, the next step will be to go find that table. So we will scroll down to table A8. So you will read the tables that you are finding on your way, looking for the one you want. So table A8, straight line method, half year convention. So we know that our recovery period is 5 years. So we are going to go through that and we find 5 years. So having 5 years, we are going to copy those rates in the column of 5 years to our spreadsheet. That's the rate we are going to use to depreciate the assets. And the asset will be depreciated in 6 years. So going back to the spreadsheet, we have the first year is 10%, the second year 20, 20, 20, and the sixth year is 10. So you make sure you have your rates properly entered, and the spreadsheet, if you have formula in it, unless you are purchasing the one at liberdownload.com, will be able to calculate the rate for the deduction, the depreciation deduction for you. So pretty much it's going to take the cost, the basis, the cost, the basis for depreciation, and that will be the cost of the asset if you are using 100% in your business, times the rates for the year, and it's going to take that same basis for depreciation times year 2 rates, and year 3 will take that same depreciation for basis, that same cost times year 3 rates. If it's done well, by the end of depreciation years, you should have the basis for depreciation matching the total depreciation deduction calculated. And you know that your spreadsheet is calculating it right for you. If you are even buying from a Liberman download, you might want to make sure the formula is working well for you. The spreadsheet is a tool, but you are the one filing your own business tax return. So it is a responsibility to make sure your spreadsheet is doing what it's supposed to be doing for you. So we have the years pretty much populated on top, but we have it at the bottom. We have it in the table here. So we know that the first year that you put the asset in service, you claim the first year depreciation. So you have to calculate the depreciation for the number of years you need to depreciate the asset and have it in your business record. You are not going to keep doing that year after year. You will calculate it in the year you purchase the asset and place it in service, and you will have that depreciation deduction for every year in going in the future until the asset is depreciated, you'll have it calculated, and then you will have it in your record that you will go back to each year you are going to file your tax return to pull number from that. So that's why we calculated all the way to 2027, the last year of claiming a deduction on these assets. So now that you calculate your depreciation deduction, you need to file Form 4562, because when you place an asset in service 1 year, when you are filing tax return for that year, you are required to file Form 4562 depreciation amortization. So now that we have that, let's go to how to fill out Form 45CC2 depreciation and amortization. You can find uh, those forms on our blog under tax forms. If you let me see here, if you go on our blog, our website nasob.com, in the sidebar you'll find tax form and instruction. So we have links to IRS forms. Okay, this is taking time to open it. So you'll find forms there. If you are looking for a form that you are having problem finding on IRS website, but you can go to IRS website, and in the search box you can type 45CC2, and you will open that form. Okay, so it's not just my website. The whole internet is a little bit slow. Okay, so Form 4562, I will suggest you download the instructions for Form 4562 and the Form 4562, so that you can read through the instruction when you are filing your depreciation and amortization form. So when it open, we can download it. But yeah, let's come back to our blog. So when you go to our blog ninasop.com, you just scroll, you'll be able to find federal tax form and instructions. So I'm going to add another title here. It's just going to be, in fact, federal tax form and instructions. I will add another page that I want not the dates, and I'll put the links there as well. That way, because what I notice is IRS does not change the link. So when they have a new dates form, when you click on the link, it will open the newest one for you. Therefore, I don't really see the point of doing the same thing year after year. But yeah, you'll be able to find forms there. So now that we open it from IRS website, we are going to download it. And let me see here. And we are just going to call it 2022 Form 4562 tutorial and save it. So we'll go to our folder and we'll open it. So how to fill out Form 4562 depreciation and amortization for your business for 2022. First, you'll enter your business name, the legal name. I like to just have the cap on so that I can use all cap. And the business activity, we are going to put retail. And you will put your business identification number. Okay, so part one, election to expense certain property under section 179. You can read through section 179 if you want to use it. They do have a threshold for it. Let me see here. But yeah, I'm not going to talk much about section 179. I do not claim it for our business, but if you want to claim it, that's totally fine. I will suggest you use a tax software so that if other additional worksheet needs to be completed, the tax software will just, you don't have to duplicate numbers. The tax software will just put those same number where they need to go so that it can save you a little time. And but yeah, you do have a limit in the millions for section 179 that you can expense some asset that qualify. But the I yeah, 2,620,000. I don't like to claim section 179. If you are making a lot of profit in your business, it might make sense to use section 179 and special depreciation if your asset qualify. If you are not making a lot of profit in your business, it may not be necessary to claim those, to expense the assets in the first year that you place it in service. And the reason is for the few years that you'll be in business, there is a chance that you might have a business loss. So if you have business losses, at some point you need to have profit as well. And there is a rule behind that. I believe the first 5 years, IRS expect to find two profits within that 5 year. So like 2 years of profit or something like that. I have now read that rule in some years now. So I don't really know. I can only tell you what publication that is in. But yeah, so for a certain number of years that you have been in business, the first few years, IRS know that you might be in the red, but they expect some profit, showing that they don't have a specific dollar amount. So yeah, don't just think about decreasing your profit and show a loss for one reason, that after a certain number of years it might put a red flag on your business. The IRS might want to look into it to see if you are really in business for profit and if you are doing everything you can to make profit, and then you have to show how many hours you are working in business depending on what they ask you when they add your business. So if you can avoid those red flag on your business, that's a good thing. The second option is if at some point you will apply for business loan, your bank might want to see your business tax return. So if you don't have a profit, it might carry into, if let's say you have a job, it might carry into your taxable income, making it lower, and it can be a challenge for you when you are trying to apply for a business loan with a bank that they don't see a profit. They don't see a profit, but not just that, is decreasing your taxable income on your tax return, limiting the amount of money they might lend you. The third option as well is it doesn't have to be a business loss. If you are trying to purchase maybe your own house, you are trying to apply for a mortgage, they are going to use your tax return. And if you have business and you want your business to be taken into consideration, well, if your business has some profit, that can be added. That is increasing your taxable income on your tax return, and that could impact the decision the bank will take regarding lending you money or not, or the amount of money you are qualified for. But if your business loss, if your business is showing loss, they may not even take your business into consideration when they are taking. They are just going to consider your income other than your income from your business. And if your business is carrying into your W-2 income, lowering your taxable income, it might limit the amount of mortgage the bank might want to lend you. So I approve you for. So those are things that may not be tax related necessarily, but your tax might might affect, and there will be some implication, some ramification from how you are filing your business tax return. It might have ramification to other part of your life. So that's something to keep in mind, and not just thinking about lowering your tax, because it might have other impacts on others in other side of your life that you may not accept, or you may not expect while you are filing your business tax return. So another drawback for me when it comes to those expensing assets like section claiming section 179 or special depreciation is, if your asset like this iron is depreciable for 5 years and you claim section 179 and you expense it, and you expense it, you are supposed to use it for 5 6 years. If you claim the full expense in year one, and by year two that iron does not really work for you, you upgrade to something else. So that means you use it for 2 years, and you have 3 years that you claim depreciation for already in year one by expensing the full amount. Therefore, for those remaining 3 years, you need to know the depreciation for, if you are to depreciate the asset for 5 years, the recovery period, what the depreciation deduction will be for those 3 years. And when you expense it and claim a full year, you will do the difference between the two, and the 3 remaining years depreciation deduction that you claim in advance by expensing the asset using section 179 or special depreciation, or both combined. You have to file form 4797 to report that early depreciation deduction that you took back on your tax return as an income. So they have um, those I don't know how to say, but section 179 is a great thing, but it comes with condition. If you do not meet those conditions one by one, the consequences that come from that, from not meeting your side of the bargain, is just more work. So there is more form you have to file, and if filing those extra form causes you to go to a professional to do it for you, or causes you to use a software instead of filing it by hand, that could cost you something. So, and also when you are claiming those I don't know how to call it, uh like those things that you might think, oh, that's um a way to lower your taxes, and sometimes it can even increase the amount of the fee you pay to the tax preparer when they're preparing your tax, because that's equal Depending on what it is, it could make the tax preparer complete other tax form for you and charging you more for it. And how much you are paying in tax fee may now might even be more than what your reduction is that you are claiming for that specific, you know, task that you are trying to, uh, I don't know, I, task perks that you are trying to take. So that's something to consider. But if you have a lot of, you are making a lot of revenue in your business, then looking into those perks that IRS has available might make sense. And when you are having a lot of revenue, you'll be able to use tax professional to file for you. If you don't want to use a tax software, you can use tax software to file as well. But usually when you have a lot of revenue, you have a lot of different type of expenses, and you are trying to find those perks available that you can benefit from using a tax professional to file your tax return might be a good thing because you may not even have time to do it yourself. Or when you have time, you use a software, a tax software. But when your business is young and you have less um, expenses to report on it. You can some form you can even file it by hand, like business tax form, you can file them by hand. But after a few years, you use a tax software, and when you are using a tax software, you will understand well what the tax software is asking because a lot of time they will use the question mode. So they will ask you question and you know how to answer that question, how to what there are to put there because you file your business tax return by hand for a while and you understand the different type of deductions and you guide the tax software toward putting those numbers where they need to go on your tax form because you know what to expect. The tax software is saving you time, but you are the master of the knowledge, knowing the right answer to give to the question that the tax software is asking. So when you are making a lot of money in your business, using the tax preparer to do it for you is fine. But when you are not making a lot of money, filing it yourself might lower your business tax expenses. And that's what our videos are about. Our content is about different ways you can save money and different ways you can make money to reach your financial independence. So, and filing your taxes yourself is one way to keep your business expenses low when you just start out and you want to spend your business capital in other side of your business to generate revenue. So but if you want to claim section 179, you can read where it's on page between uh, around page 10 of the publication. You will find a little bit on the instructions as well, instructions for Form 4562. So now that we talk about this, we will come back to it, but we are not going to file, we are not going to claim section 179. So we are going to leave part 1 blank. So by part 1, line 1 to line 13, we are going to leave a blank because we are not going to claim anything there yet. So part 2, special depreciation. So special depreciation, we are not going to claim it either, but if you are going to look into special depreciation and they say does not include listed property, and listed property are property you use for personal use and business use. And automobile will be included as well. So if you are looking for information on special depreciation, let's see where we can find it here on the publication 946. And another thing I like to point out for section 179 is it does not decrease your business um, your business revenue or your business profits, because it does now, it goes on Schedule K and it goes to the partners, and the partners will put them on a specific form when they are filing their 1040. So it does not automatically lower your profit for your business. So for that reason, I just don't um, care much for it, because when some partner may not be qualified, may not be able to claim their section 179, because it comes with some conditions as well. When you are reporting on your 1040, it'll go to some other form and will carry over to our 1040. But it's something that flows through to the partners, So yeah, and that's one drawback for me as well. And when it comes to section 179. So special depreciation, you can read it on page 23 of publication 946. But in our case, we are not going to claim it. But when you read it, you will see what kind of property are qualified. So since we are not going to we are not going to take special deduction for our iron, we are going to leave part 2 alone. So part 2 has line 14 to line 16. So we are going to leave it blank. Part 3, Mark depreciation don't include listed property. So section A, line 17, Mark deduction for asset placed in service in tax year beginning before 2022. So if your business started in 2022, line 17 will remain blank. But if your business has been around before 2022, well, if you have purchased assets and you have not expensed them, you have been depreciating them, you need to go look for your business record for those assets to find the depreciation deduction for the year 2022 that you need to take. So for that, let's go look for our depreciation spreadsheet. And we can find an example when the depreciation spreadsheet that we have been using for the iron, we have other years in it as well, and we have depreciation calculated for them. So for asset placed in service in 2021, you'll find assets, the depreciation deduction for 2022 that you need to take. For asset placed in service in 2020, you need to find the depreciation deduction for 2022 that you need to take. And if you have further into it, you need to find the depreciation deduction for 2022 and so forth. So we like to have those summarized on another spreadsheet, and it is printable. Like, it's good to print the summary tab for your business tax record. So pretty much this is okay. So asset placed in service prior to 2020, and we pull it from, let's go back to 2020 here, and let's go to the depreciation. So cost or other basis. For that, let's go to that year. So they say prior to 2020, is it? Let me see. Prior to. Okay, so that means we need to find a year before 2020. So Let me put the total here for you to see it. Okay, so let's see if I need to make this a little bit bigger. So 658.10. So let's go back to the summary. So 658.10. So for asset placed in service in 2020, let's go look for that 318.81 is the total of all the asset placed in service in 2020. In this example, 318.81 asset placed in service in 2021 2,384. Let's see, 2,384. Okay, so the next line is trying to total them. Asset placed in service in the current year 2022, and that was the iron in our example, and that's 997. So 997. So now, because we are not claiming those special depreciation, so depreciation for prior years, that's something you need to keep track of. So depreciation for prior years, so pretty much is, let me see here, every year add the depreciation deduction colon amount taking the prior year to the amount in this column. That is the depreciation deduction taking prior years. So and one way to do that is total the line 624, for instance, is going to be for 2019. Let's go up here. If you can see the, let me make it a little bit smaller. In fact, I think we should be able to colon W. So if you select everything you have claimed prior year, is 624.14. 624.14 on your summary is 624. So 624, the rounding has issue, and you'll notice that I try to add them to it as well. So pretty much the colon depreciation deduction for 2022, for 2023, when I'm completing this table, I'll add those total to this column total so that I can track the depreciation deduction that I have taken the prior year. So that's pretty much the way it's working. So, and that is the same thing you'll do for 2020. Everything you have taken all the way to 2020, 21, since we are working for 2022, you'll add it there as well. And those are that. And then for 2021, it was just 1 year depreciation. So last year, the depreciation that I took for asset placed in service, the depreciation deduction that I took for asset placed in service in 2021, I put it there. So you have to make sure you do not double add numbers because I have different type of years. You have to make sure you are following those. So depreciation for basis for depreciation. So pretty much this column is trying to calculate how much more you have left to depreciate. And it's just taking uh you know what you started with what you have taken so far, and depreciation deduction for the year we are in, it will come from your spreadsheet. So for 2000, for year prior to 2020, we'll go look for it. And I tend to highlight it, and it's 2022 year, and it's 3102 for asset placed in service prior, uh like 2019 and prior. So I will, is it here? Yeah, 3102. And asset placed in service in 2020, we need to go look at that spreadsheet as well to find 2022 depreciation deduction to take is 63.77. cease. So we'll go to our summary, depreciation summary, tab CC376, and depreciation placed in service in 2021. We need to go look for 2021 depreciation sheet and find 2022 on it. In 2022, we'll claim 473. So 473, we'll put it on our 2021 uh, column as well. So this depreciation asset placed in service prior to this current year tax return 2022 that we are filing is going to be the total of all the assets we place in service all the way to 2021. So it's going to be 5 CCA 47, the total of those two. So 5 CCA 500 CC8 47 will go on form 45 CC2. So on line 17, we'll put 400 CC8. Let's go check to make sure we don't need to round. 400 CC8.47. 500 CC8. It's 500 CC8. So 500 CC8. 500 CC8.47, and 4 we don't need to round it. Okay, so if it's 50 you can round it to the nearest dollar, but if it's less than 50 we just leave it like that. So asset placed in service in tax year prior, in tax year beginning before 2022. For this example we have before 2000 up to 2020, up to 2019, 2020, 2021 assets deduction that we need to claim for 2022, we combine them all is 5 CCA. So line 18, if you are electing to group any asset placed in service during the tax year into one or more general asset account, click here. So let me show you where you can read more about it. And I do not like to group assets. And I think I have done it before in the past. It makes things a little easier. You won't have to complete multiple sheets of Form 4562 for line 19. But there is a drawback to it for me, is when you group assets, first to group assets, they have to have the same classification properly, the same recovery properly, the same recovery period. So, and pretty much you have to depreciate them within the same, like they have to have the same number of years you have to depreciate them for you to group them together. What I don't like about grouping assets is when you group assets, you will combine all their costs and then they have the same recovery period, let's say 5 years, and you depreciate them because on the form 4562 you have one line for every type of classification of property. So when you group assets, if let's say year 2 you take some asset out of that group, you dispose of them, you are now going to change the basis of depreciation for the asset that you group. You are going to continue depreciating them year after year, but those assets you took out, you are going to calculate the remaining 3 years of depreciation that you are going to continue taking when you are claiming those depreciation deduction for that group assets. Those 3 years of the depreciation deduction, you are going to put it on form 4797 as income. So again, is if you take something out of your, you dispose of an asset, inside that group, you have to claim the remaining depreciation that you are going to continue taking as income. So for that reason, I don't like grouping assets, and it is more work if you have multiple assets that are going to go on 5 year property line. You have to use multiple forms the first year you put them in service, and And for following year, they can go, what you will claim for them will go on line 17. So you just have to total them. But for the year you place them in service, when you are filing form for a 562 for that year, it can be it can be yeah, you have to use a lot of form 4562 to put them on it. So I don't know if I passed it already, but they they call it GAA, General Assets Account. And I will have the, okay, that is on page 47 of publication 46 of publication 400 of publication 946. So you can read more about it to see if you want to group assets. And what if you do not follow through with your side of the bargain? What you need to do? So to see if you are willing, if you still want to take it. So I'm not going to group anything. And in prior year that I have multiple assets, if I can show you an example here, let's take 2021 for instance. So for 2021, when I have a lot of 5-year assets, that's the number of Form 4562 I had to complete for the business tax return. So, and when I have two, I don't know if you can see, but when I have two 7-year, that will be two Form 4567 for that. And then I have multiple 5 years because I didn't want to group it. But if you want to group it, you can group all 5 years together and you can group all 7 years together in this example. But I didn't want to group it. So therefore, there is a lot of form. And when you have to add attachment to complete multiple, to show those um, type of depreciations, I just use Form 4562, and you only compute part 1, section 179 on one form, and I like to compute part 4 summary on one form as well. So all the other, and then amortization will go to one form. So the form that will have the summary, like the form that I will use for part 4, part 1, and amortization, like one form will have those things on it, and the other form will just be completing the session for each asset, part 3 for each asset. So it can be a lot of paper work doing that, and that's for the first year. And after that, all those assets taking place in service in prior years will just go online 17. So for this year though that we are using this example, we only have one asset for 5-year property. So now that we cover line 17, line 18, let's go to section B, asset placed in service during 2022 tax year using General Depreciation Service, GDS. So A is line 19, A, classification of property. So we need to look for our property class here. And when we go to our spreadsheet for 2022, our property class is 5. So we will go to our, that is where we are going to put information. So column C. Column B, you leave it alone. Dates and MACRS in year, you don't complete it anymore, so they cover that. C. Um, Based on depreciation, and the reason why they cover this section is if you group assets, you check 18, all your 5 years, like the way I showed you the example in 2021, all the 5-year assets will depreciation, deduction, costs and deduction will go on this line B, and I have 7 years, they will go on line C. Those could have different type of dates. So that you put them in service. So I think that's why they just grade that area so that it can apply for whether you want to group assets or not. So C, basis for depreciation. Basis for depreciation, business use only. So basis, pretty much the cost of the assets. So because it's used 100% in our business, is going to be 999. And at this point, we can use the summary, but I tend to use the summary for the prior year depreciation deduction that I need to claim in the current year. But cost of basis is 999, 997 is going to be $10. So we are going to go back to here and we are going to put 10. The recovery period. And what I like about the depreciation summary, the one that I will print for business record, I like to copy the depreciation for asset placed in service. I like to copy that and paste it under that prior year depreciation summary tab. If I click on this, for instance, you have 2021 prior year things, but you have asset placed in service right underneath it so that I don't have to go back and forth between the two. Just giving you ideas if you want to design your own. So I can just look here if I don't want to go back to the other spreadsheet. But sometimes for asset placed in service during the year, I just like to come back to this spreadsheet that I work on. So what we are looking for is what? Recovery period. So recovery period, we have GDS 5. So we'll go back to our things here and we'll put GDS 5. Convention, I believe we took a half a year. So let's check it. Convention is half year. Half year. Method. Okay, so let's go back to our spreadsheet here. Depreciation method is SL. So that's why I think at the beginning I have method without anything to it. Let me see here. Yeah, that's why I have method here, but it's depreciation method. So left side of the assets description and right side of it I have duplicated tarots. So method SL. So we will go here and we will put SL, depreciation deduction. So we'll go back to our assets and we can use both spreadsheets to double check numbers. So 2022, let me see here. So this one does say rate. Yeah, so at this point, what I like to do is, no, it's not the rate I need to change. Okay. So like when you place when you are using the spreadsheet, you have to update the dates every year when you are entering information for that year, you have to change the date. So we have 2022, that's what we are going to depreciate for this asset, and it is $1. And we can find that on our summary as well. Depreciation deduction is 1 year, and basis for depreciation we have it, and depreciation deduction is $1. So we'll go back here and we'll put 1, and pretty much we are done with section B because that's the only asset we have to depreciate. But if you have more, like 7-year property assets, you will enter that as well, and so forth. And if you have residential property, residential rental properties, they will go on 19 age. They are depreciated for 27.5 years, and they have mid-month convention. And you use straight line. So they have those things populated for you, and you will um, depreciate that. We do have a depreciation spreadsheet to calculate residential rental property at Liberman download. But if we go to the publication, let me go to appendix A. If you have rental property, you will look here 27.5 mid-month residential NA A6. So you are going to use table A6 and you are going to look for table A6, and you have pretty much the month you place the asset in service. For the colon, because you have 12 months in a year, you choose the month you place it in service. If you place it in service in April, you use colon that's it 2, and you depreciate for 27.5. So that will be pretty much to year 28. So you'll copy the you'll copy column 2 rates all the way to year 22 to your depreciation spreadsheet, and you will depreciate the assets using that. The spreadsheet that I'm using is now for residential and non-residential property. We have another depreciation sheet that cover residential and non-residential, that cover residential rental properties, and pretty much cover other assets as well. I have different types for them, but these spreadsheets cover assets you can depreciate up to asset that has 7 years recovery period. And yeah, I might probably add more to it as well and have those listable. Yeah, for 5 years, 7 years assets recovery period, you'll be able to use this depreciation spreadsheet for it. And we do have other depreciation spreadsheet for residential rental properties. Okay, so now we have, let's go back to our depreciation, but you see the rate, how you will do the rental property section. And you just follow the same principle to look for the 30-year and 40-year if something classified for those. But yeah, if something classified for at ADS, you will you read about it in the publication and follow the instructions. But if you have non-residential real property and those are more commercial building, you have 39 years to depreciate it main month, and you have straight line as well. And the table will the table appendix A will guide you to the title of the table you will use. And for 39, you'll use A7 and A7A, A7A. So you will, so A7A for GDS 39 for non-residential. So they have two options there. When you read, you know which one qualified for you. So now let's come back to here. So now that we complete session 3 for assets depreciation under MACRS, we will go to part 4, the summary. So the summary, they say line 21, listed property. It will come from line 28. And listed property is on part 5. And when you are looking for, you can find information on listed property on the publication 946 as well. And there is something I like to point out. Let's go to the instructions page 1, or probably page 2. Okay, page 2 of instructions for Form 4562. So, lease a property. Lease a property generally include the following: passenger automobiles, any lease a property used for entertainment or recreational purposes, such as photographic, phonographic, communication, and video recording equipment. But they have a section, and that's the section I want to bring to your attention. Lease a property does not include phonographic, phonographic communication and or video equipment used exclusively in a taxpayer trade or business or at the taxpayer regular business establishment. So if you purchase camera or video recording equipment to record video, let's say you are a YouTuber, if you purchase those equipment, they are not listed properly if you purchase them for your business and you are using them in your business 100%. So you do not depreciate them under listed property. They'll just go in the regular assessment where we depreciate the iron. So that's why they say those are not listed property if you are using them 100% in your business and you are keeping them in your business office pretty much. So that include any computer and or peripheral equipment used exclusively at a regular business establishment and owned or leased by the person operating the establishment. So there is another side of this. So when they are saying at your business place, let's see what that entails. So for purpose of the exception above, a portion of the taxpayer's home is treated as a regular business establishment only if that portion meets the requirements for deducting expenses attributable to the business use of a home. However, for any property listed in one above, the regular business establishment of an employee is his or her employer's regular business establishment. So if you have a home-based business, you work from home, you need to have an office dedicated for your business to be able to to do like business mileage, to be able to claim those business mileage. You need to have a place dedicated for your business. So if you have that place that qualifies to deduct business use of of your car or things like that, or business use of your home, there is a requirement for it. You are not going to be using it for other things. You have to have, even if that's in your bedroom, you have to have a place dedicated for your business and you do your business things there, like the way we are here right now working here. When you purchase those equipment, recording equipment, that can easily be called as lease property because it can be used for personal use as well. When you are using it for your business and you are keeping in your business establishment, like here, they are not listed properly for you. For that reason, we are not going to cover listed property much. But again, if you have listed property, like you have your car that you are using for business and personal, listed property will be where to do that. But if you are a S corp, uh, an LLC filing 1040 or an S corp or LLC tax as an S corp filing 1120S usually is better to reimburse employees and partners for business use of their things, like for like have employee reimburse account under accountable plan so that you don't have to uh, put those expenses on report those expenses when you're filing your 1040. Like the partners have not going to put those reimburse employees expenses on the 1040. But again, if you are using your car for your business and you have LLC file as an S corp, for instance, reimburse yourself for business use of your car under accountable plan using um, one it could be the actual expense, or two, using the IRS standard mileage rates, whatever that is, 50 cents per mile or 55 cents or whatever that is. Every year I think it changes, so that you don't have to trying to, yeah, put those information elsewhere. So you just reimburse yourself for those uses, and it'll go on your 1120S, and you have to make an attachment for those expenses, because it will go under other deductions, and you have to attach a document describing those different type of expenses you put under other deduction. So we don't have anything this example to put on part 4, but if you did, line 28 dollar amount will go on part 4, line 21 for listed property. So line 22 total, add amount from line 12, line 14, through line 17, and line 19 and line 20. So, and line 21. So 22 is just going to be the total of all the depreciation deduction you are going to take without amortization. However, if you are filing 1065 for your LLC, or you are filing 1120S for your LLC tax as an S corp, you are now going to include line 12 total on line 22, and line 12 is section 179. That's what I talked about earlier, that section 129 deduction will go to schedule K and go to schedule K1 for the partner. It flows to the partners. It's not going to decrease your business revenue, so profits. So line 12, section 179, enter here and other appropriate line on your return. For partnership and S corp, see instructions, so you can read about it, but line 12 is not going to be added. So let's go to that instructions, and let's go to is the instruction for form 4562. So let's go to 22. A partnership or S corp does not include any section 179 expenses deduction line 12 on this line 22 that we just came from. Instead, any section 179 expense deduction is passed through separately to the partners and shareholders on the appropriate line of their schedule K1. Okay, so that's why line 12, if you complete it and you are filing 1120S or 1065 for your business, you do not include line 12 total on your line 22. So other than that, you have the special depreciation, line 16, line 14, you have line 16, part 3 that we did, you have line 19, those total that will come from there, line 20, those total that will come from there. So line 19, line 20, line 14 through 17, line 21, you'll add them on line 22. So for assets shown above and placed in service during the current year, enter the portion of the basis attributable to section 263A cost. We'll just leave it blank. Part 5 lists a property, we just went through it, but if there is a car that you will, if you put something automobile involved, here under list a property, you have the section that you have to complete how you are recording your business and your business use of the car. You will check those things that are related to it. Otherwise, you just leave them blank. If You are now putting anything on the list a property session, and the depreciation is done. But in this example, we have amortization. So part 5, now part 6 amortization. So there, if you have a business, you might use software. So there are some assets that are intangible that you have to amortize it. So even startup costs, organizational costs, when you just start your business, you can fully expense it the first year. But if you didn't, there is a threshold. If the amount is more than that and you didn't expense the whole amount, you will amortize the rest. And under the instruction, you'll see for how long you will amortize that. And let's see if we can, for startup costs. So for business startup costs, after 2028, you can elect to deduct a limited amount of startup cost or organizational cost for the year that the business begins. You are now required to attach a statement to make this election. Once made, the election is irrevocable. Any cost not deducted currently must be amortized ratably over 180-month period. The amortization begin period starts with the month you begin business operation. So it will have a code for it. So for organizational costs, for partnership code is 709, and for startup cost is section 196. For organizational cost for corporation is 248 section. So another thing that I like to bring to your attention is 1 year tax of like one fee tax software. When you purchase a software, computer software that can be viewed as over the counter computer software that you pay one-time fee for, they say to depreciate it. It is an intangible asset other than 197. So 197, you can read in the instruction what is included in 197 session, and those will be, yeah, certain section 197 intangible. You have those intangibles and they are amortized for 180 months, 15 years. But computer software, if we go back, they say to depreciate it. So let me see if I can find information on that. It will be on page 3. Page 3. It's not on page 3. So we'll go to the depreciation section for the instruction. So intangible property other than 197 intangible, including the following: computer software, use the straight line method over 36 months. A longer period may apply to software leased under the agreement. So yeah, you can depreciate in it using straight line for 36 months. It's exactly like amortization, but you can put it under the depreciation section. So I have amortized mine following the same instruction. Therefore, we have that, and it was prior year, but we need to claim the deduction for this year. So it will have the information, but when I try to amortize it, I just put other for the session code, I put other than. But again, exactly the instruction they gave to depreciate it is exactly the way you do it when you are amortizing, because with straight line, the way they say to do it, you are going to, they say 36 months. So the first year, depend on, let's say you started December of 2022. So December 2022, that'll be 1 month. So 1 month divided by 12 will be the deduction you will take the first year. And the last year of depreciation, you take that remaining 11 years, if 11 months. So, and exactly that's the way amortization works. I don't know why they want that to be depreciated. So I just feel it like it's better to amortize it because depreciation has multiple nuances, main quarter convention, when you have asset placed in service, more asset placed in service during quarter four. For that reason, I just prefer to amortize my computer software, but they recommend you depreciate it, but you are going to depreciate it exactly the way you will amortize it. So because we are amortizing the first year we place in service, we are going to continue. So we need the depreciation, the amortizable amount for 2022. So let's go to our amortization part 6. So if you are placing an asset in service the first year, line 42, you have to complete it. So for line 42, column A, you describe the asset, you name it. Column B, amortization begin, you put the month. And column C, amortizable amount, that would be the original cost if you use 100% for business. And then section D will be the code, and you'll find the code for whatever asset it is in the instruction where we just came from. Let's see here. Sorry, but yeah, you look for the code. By the way, I was talking about code earlier for startup cost. So if you have something that is intangible, that is section 179, you look for your whatever intangible asset you want to amortize, and where you found it, that will be under a code. So if you find something here, a pattern for example, then that will be section 179 intangible. One the code will be section 197 intangible. So you will put 197 intangible under code section. So amortization period or percentage. If we go back to our spreadsheet, let me just put an example here. Let's say, that software that I try to it's not a good example in this session though, since they recommend you depreciate it. But let's put that in a 37.99 just as an example, like if it was purchased in 2022. So 37.99, that'll be 38. Amortization begin 11/27, and let's just put 11/27/2022, since the only way you put something on line 42 will be the year you are filing for. That's the year you place it in service. Let's use that in this example. And the code, okay, let's say all of those example is for yeah, anyway, let's leave it like that. But the code in this example, because it does not have any code, I put other than 197 intangible. So it does not even have a lot of space for me to put everything. And amortization period in this example, amortization period is 36 months. So when you go back, you put what that is, 36 months, or you can use percentage. And amortization for the year, and that will be the first year. That will be the first year. That will be this 106. And pretty much what it's doing is, let me see here. Because I calculate the rate is, I'm just using the rate, but the way the rate works is, because I purchased it in November, I use it for 1 month. So I'm taking one out of 36 months. Because you are going to depreciate for 36 months, the first year is going to be 1 month. The second year is going to be 12 out of 36. The third year is going to be, because you are going to do it for 36 months, which is what? 3 months, right? 3 years, right? So the second year is going to be 12 out of 36. The last year is going to be 11 out of 36 as well. So the numerator for all those years should total to 36 for you to depreciate the full amount, 37.99, by the time you are done. And once I calculate the rates, I just use that to calculate the dollar amount. So 106 in this example will be just there. That is how you complete for asset placed in service during the year. But in this example, we do not have any amortizable assets. We are going to take those. But we do have asset placed in service prior year. That's what we are going to put in it. Okay. So line 43, amortization of costs that began before 2022 tax year. So we'll go to our amortization spreadsheet, and we have 2022 12 CCCs, and that'll be 13, and total will be line 42 and line 43, and that will be 13. So let's see this one here, 569. I don't know, did we complete that one? Let's see. And then at the bottom we have 13. I think I talked about line 22, but I didn't put any number on it. So here, when we talk about total amount from line 12 all the way, we didn't put anything here. So let's not forget. So in our example here, we have number on line 17, we have number on line 19. So 5CCA plus 1 will be 569. 569. We forgot about that before we went to the amortization. So we are pretty much done completing form 4562, depreciation and amortization. We have number on line 22 and we have number on line 44. So how do you report those on your tax return? So we have an example here for 1120S for S Corp. When you are completing when you file your form 4562, you are going to attach it to your 1065 or 1120S, whichever you are using, but it will have depreciation section here. Line 14 for 1120S S Corp tax return, depreciation from form 4562 now claim on form 1125A or elsewhere. Attach form 4562. So depreciation on this, we will go back to our form, and that will be line 22, 569. So 569 will go there. Amortization does not have a spot here. They have line 20, total deduction. Now, they have line 19, other deduction. That's where amortization will go. But amortization will go to your attachment. You'll have attachment for other expenses that you didn't find a place to put. They will go on your other attachments and they will land on line 19. For now, assuming we don't have anything else other than just amortization, that 13 from the amortization section, line 44, will go there, but we will attach a statement that will show that 13 for line 19. So that's how information from Form 4562 will land on your 1120S. Let's check Schedule K. So Schedule K, Section 11, Section 179, attached Form 4562. If you have completed Part 1 of Form 4562, oh, come on. If you have completed Part 1, so line 12 that you didn't include on line 22, that I say it will go on your, it will carry to Schedule K and K1. This line 22 for Section 179, it will go on Schedule K. It will go on Schedule K. Line 11 if you have something on line 12. So let's check partnership 10cc5. 10cc5, line 16A has depreciation. If required, attach that. Less depreciation reported on 1125A. So line 16A was 569 if I recall right. And okay, so line 16A, that's what we'll do. And other deduction, we'll have that 13. And it is on line 20, other deduction. So the amortization will go on line 20 on Form 10cc5. And it will be on an attachment. You will add your statement where other deductions includes. You'll add that statement to your form. So if you have completed Part 1, Section 179 on Form 4562 for 10cc5 S Corp, it will go line 12, Section 179 deduction will go on your 10cc5 Schedule K, line 12 as well. Line 12, Section 179, attached Form 4562. So it will go there. But we didn't complete Part 1 on our Form 4562. Therefore, we don't have anything to put on those lines. It will stay blank. So that's how Form 4562, when you complete it, that's where those numbers will go on your business. That's return 1120S. If you are filing 1120S for your LLC, that's as an S Corp, or you have S Corp, or that's how it will go on your 10cc5 if you have LLC filing partnership tax return for your business. So thank you so much for your time. So in this video, we understand how you depreciate assets, and we use that to depreciate an asset and complete Form 45cc2. If you are using a tax software, once you answer the question based on what you have on your spreadsheet, once you answer the question, the spreadsheet will be able to calculate the depreciation deduction for you and put it at the right places on your tax return, so it might go faster. So that's something to keep in mind. If you are filing your tax return and it's little bit, you have a lot of data to work with, it might save you time to just use a tax software to file your tax return. And that is a form that goes with your business tax return. So when you are using a tax form, you are filing 11S, it will be able to generate form 4562 for you. If you are filing 1065 and you have asset to depreciate, it will be able to, the software will be able to file form 4562 as well for you. So this just to show you how those things works. If a software is doing it for you, you may not really know how those things are done in the background. But having a good understanding of it will help you double check the numbers that the software is coming up for you, and you'll be able to see on your tax return in the table format where those numbers went.